everyone, welcome back. Thanks for taking time out of your day to tune into this channel where we bring you the latest stock market news. Today, we're chatting with MarketBeat contributor Thomas Hughes, and we are talking Target. Target just hit projected earnings and revenue, but guidance was muted. So where do we go from here? Let's find out right now. Thomas, welcome back. It's always good to have you share your insights with us.
Thanks, Laycee. Good to be here as always.
All right, so Target has been range bound for some time now. Would you call this a healthy pattern, or can we expect it to break out soon?
Yeah, I don't think it's going to break out soon, but it is healthy for the market to consolidate within ranges. This will lead to good things in the future. It helps the market kind of rebalance itself. But for now, Q4 was good. The guidance was bad. What we really have here is a situation again where the guidance is bad, kind of less bad than was expected, but worse than the consensus. It may sound kind of unusual. The consensus is what the analysts are expecting, but the trend with earnings the last few quarters is that the analysts have been very hesitant to downgrade their forward estimates without having the current information. So Target guides lower, but not quite as lower as the analysts might have been thinking in the back of their minds might happen.
All right, Thomas, what do you mean by that? Target's already down more than 45%.
I mean, it could get worse than that. The results and the guidance confirm that a cliff is looming, and that's the post-pandemic consumer spending cliff. To date, the strength in the economy has been enough to sustain growth, but that's getting ready to change. Let's look at the chart real fast. So we see here Target's corrected from these lofty levels back down to here on the expectation that spending is going to slow. But right now, the guidance and the outlook is still getting worse. So this downtrend could continue. This consolidation could very well retest these lows and break through. But for now, it looks like the stock is probably going to move sideways.
So give us the best and worst case scenario moving forward. What do you think can happen now?
Well, the best case scenario is that Target will move sideways within this range. At some point later in this year, there should be a shift in sentiment. Earnings growth is expected to return in maybe not the third quarter, but probably in the fourth quarter, and that should help support prices. Worst case scenario is that the earnings outlook will continue to deteriorate, and Target will just move down to the bottom of this range and smash right through it. Let's look at the monthly chart for a second. And you can see that Target has quite a ways to fall to get back to its pre-pandemic levels, from about 160 to about 85, almost a 50% decline. So that really is the worst case scenario.
What else do we as investors need to be aware of?
The analyst activity in Target turned mixed at the end of last year, and it's continued to be mixed the first part of this year. And that they already see the stock fairly valued at the top of the range. If the shift continues to turn bearish and they continue to lower their expectations, it will for sure cap gains, and it will definitely add downward pressure to the price action.
And how will we know that the tide has turned, Thomas?
The analysts shifting their sentiment back towards bullish will be a good sign that the sentiment has changed. There's a good chance that the price action will bottom before that. Support at the bottom of the range or the 2019 highs are good targets to start with, but it's hard to know which one is going to be confirmed. So that's why it takes patience. You have to wait and for the market to confirm these targets. Until then, Target is a dividend king with a healthy 2.6% yield. That dividend should not be in danger. So people that are already holding the stock should probably stick to their plans, collect that dividend, use these new lows for entry points, and wait for the market to start giving more buy signals.
All right, everyone, we hope you enjoyed this conversation about Target stock. While the current range-bound pattern may be healthy on the surface, it's important to take into account the potential looming cliff and downside risks. As investors, we need to stay informed and vigilant, keeping an eye on any shifts in analyst ratings and price action. Remember, the best course of action is to do your own research, stay disciplined in your investment strategy. Don't forget that MarketBeat All Access can assist you in this strategy. Click the link in the description below if you want to check that out. All right, everyone, thanks for tuning in. Thanks again, Thomas. Thanks for joining me today, and we'll see you next time.
Thanks, Laycee.